Thank you and good morning to everyone who's listening to us today. It's a great pleasure to be with you today, talking about deepening the financial and capital markets in Ghana. And frankly, we're going to touch on Africa because everyone on this call here are keen supporters of the Ghanaian markets and also play a broader role in Africa, which I think is important in this conversation today. It's my great pleasure to be joined today by Ibukun Adebayo at the London Stock Exchange, Ayo Salami, Mikir Shah, and Banji Theintola. We're going to talk today, we're going to have a conversation about this particular topic of deepening the financial markets, local and frankly international. And it's quite interesting that we're talking about Ghana because Ghana is, to my mind, definitely at the forefront in terms of innovation in tapping in managing their financial their financial responsibilities in a backdrop where it is very clear to all of us that the capital required to develop Africa doesn't reside solely within Africa. That said, deepening the local markets and making the local markets more self-reliant does help manage some of the bigger risks that we have in the continent, and actually does help us and does help with deepening the economic growth that happens in the continent. We're going to speak about these points in a bit more detail. What we have seen over the last few years is Ghana leading the edge in innovation in terms of the manner in which they have approached investors, local and international, the types of instruments that they've engaged in, whether it's ESG type instruments. In the last debt instrument, international debt instrument that was taken into the market, there was quite a number of innovative steps taken there. The first one was issuing the first sub-Saharan African governments to issue a zero coupon bond, and also managing the maturity profile and issuing maturities at 30 years, which is taking African SSA debt along the curve. So those two initiatives, amongst many others, had two very important points for Ghana. It was saying we must borrow to grow. We must borrow to grow, but we're going to borrow responsibly. And in doing that, we're going to have a reduced cost of financing by adding in a few innovative products. And we're going to reduce the financing stress on the country by extending the maturity so that the timing and maturity payments of the instruments are key. And a significant amount of the money that was raised internationally was used to pay down some of the local debt, just because it reduced the burden, the costs of borrow burden to the country. And debt is not the only way that Ghana is looking at its the financial responsibility it has at this time. So what we wanted to do today, as I say, really focusing primarily on Ghana, but really looking at Ghana's leading role on some of these topics and taking a lens on Africa, is just to talk more about how much more can be done to deepen the market. We will talk about the thinking around the issues. We're not interested in the narrative, and we want to talk also about what sort of action could be taken going forward. So I'm going to start first with Ibukun to say, Ibukun, one of the most important issues that we have in thinking about the international investor community still engaging in the local or the international markets is FX risk. What are your thoughts around how this can be managed? And what are some of the initiatives and developments that you're aware of or have been involved in that help to address some of these issues? And then I'm going to move on to Mikir because he has some insights on the same topic as well.
There, I've learned now not to carry on speaking whilst I'm on mute now. I've learned. So there we are. Yvonne, it's a pleasure to be here with you, and thank you for moderating this panel. Thank you to Invest Africa for the reinstatement of the Africa debates. It's one of the most phenomenal pieces of conversation on the internet, so I'm very, very proud to be part of this alongside my illustrious panelists as well. So Yvonne, to your question, yeah, FX risk is probably one of the biggest issues, and particularly around portfolio and investment flows into Africa. I think last year, 2020, according to World Bank statistics, portfolio flows into Africa were less than about $3 billion. For a continent of this size that needs international capital, that really is not a manageable situation. And a lot of the issues are centered around, as you quite rightly say, currency volatility and unexpected movements and illiquid FX pairs across the continent. Now, there are many different things that we can look at in terms of mitigation of that. And I probably would hand over later on to Makir, who I know has been doing a lot of work on that. But at the London Stock Exchange, we are hugely focused on that. And Yvonne, you gave a very interesting opening introduction about innovation from Ghana in terms of the bond market. One of the things that we're trying to innovate is local currency financing, so offshore local currency financing, which, by the way, Ghana has innovated on. So a company called Quantum Terminals was the first to list an international tranche of a bond. They raised a SEDI bond in London, which is yielding something like 20% coupon. And it's a very attractive investment opportunity for investors. So it shifted the FX risk away from the issuer and to international investors who have much more sophisticated tools with which to counter and mitigate the FX risk. I would like to see the government of Ghana take a very bold step and look at a Ghana SEDI bond. I think setting an international yield curve on the sovereign side would be a phenomenal way of encouraging more local financing and shifting rather than mitigating FX risk, but nonetheless countering one of those challenges. So I'll stop there, Yvonne, but I think that would be something that would be a very exciting development. I know the UK government, the Foreign and Commonwealth Development Office in particular, has been paying a lot of attention to that side of capital market development. And what I should have said, really, to be completely comprehensive, is that we should be looking at dual listing these bonds and creating some form of fungibility across markets so that you're essentially getting a full comprehensive capital raising opportunity.
Yeah, that's great. I mean, the idea of a CD bond, especially dual listed, it will open up more vistas of capital flows for not just Ghana, but any of the other countries out there. Just Makir, again, FX, because we want to knock off the table the big things that investors think about when they think about investing in countries that are otherwise attractive like Ghana. So what is your take on FX risk? And importantly, what are your views on some of the ways that we can improve how countries manage FX situation?
Yeah, I mean, look, I think what Ibrahim has said is perfectly fair. At ASR, Africa Specialty Risks, for those who don't know us, one of our mandates is to help investment into Africa and to de-risk investment into Africa and help the continent grow. So the things that we do that we've seen huge demand for is what we call political risk and trade credit. So we de-risk investment into countries through the political risk product that we have and through trade credit products we have. That sort of protects the investment against political change. It also protects the investments against the FX convertibility. So if you can't get your dollars out of Ghana or any other country because of FX issues, we will pay out and we de-risk in that manner. In terms of FX volatility, I think Ibrahim's got a very good way of dealing with that. We do need deeper markets, deeper FX markets, more liquidity in these markets, and there's all sorts of different structures we can use to hedge against that volatility. As we can see, if there's a SEDI bond in London paying 20% yield, that means that the local business has to deliver that as well. And that does put a fairly hefty hurdle rate on that local business. So I agree, if the government of Ghana issued a SETI bond and gave us a benchmark along that, that would be great. In terms of de-risking and providing that FX liquidity coverages, we provide that. And we're looking right now to extend our own capacity by the help and aid of people like other financial institutions who would also like to help us in that risk mitigation. The reality is, whilst there's a perception of substantial risk in Africa, very few African governments have actually not delivered on what they said they would, compared to the rest of the markets in terms of developing and frontier markets. And therefore, the more we can do to risk mitigate, the more investment we'll get in. In terms of the local capital markets, and I know everyone loves to talk about developing local capital markets, in order for that to function, the banks locally need to be able to lend to businesses. At the moment, they tend to just invest in government bonds. We need them to lend to businesses. In terms of local savings, well, actually, if you see what's happened in the West, it's been the pension funds, the life companies, and insurance companies that have driven the pool of capital that's actually supported the local capital markets. We haven't got a very developed market in any three of those across Africa, in any country across Africa except South Africa. So we need to develop those markets. What we do is work with local insurers and reinsurers to help them retain some of the risk and retain their funds in country to help invest in the local markets and provide liquidity into the local markets, which is something we need to try and generate a bit more of. And Ghana is a great example of where I think we can do. I know that Mr. Afori, the insurance commissioner, is working very hard to develop the local insurance markets, and I'm looking forward to working with him in concert around developing this a bit more.
That's great. Thank you so much, Makir. There's lots to unpack there. I will be back to you on some of those points. Ayo, so one of the things that Makir mentioned that I want to pick up on. So we're talking about debt markets, equity markets. Clearly, in terms of developing the financial markets, actually broadening out the suite of instruments we have, instruments that speak to FX risk. And so I'd like you to just share your thoughts on that. And also, very importantly, Duet Capital has been around for a long time, investing in African markets, supporting African markets. What are your thoughts on the equity capital markets in Ghana as well? How do we develop that? How do we, they've made a lot of progress on the debt capital market side. Lots more to do on the equity capital market side. How do we do that? What is it that's going to make it more interesting, more attractive for international investors like you who understand the terrain to come in and support the market whilst obviously making money?
Thank you very much, Yvonne. And again, thanks also to Invest Africa for putting this panel together. I think we all recognize that Africa does not have the capital to be able to, or we don't have the savings rate that would allow us to be able to power growth. And to do, we need to attract more foreign capital onto the continent. Now, if you look at the history of investment flows, especially into the equity markets, in the 1990s, nobody was interested. You could hardly get any international investors to look at Africa, and I think there were only 2 Africa funds. And then from about 2002 until 2007, there was an explosion. There was a period when there was a narrative of Africa rising. It was partly driven by the global commodity story. And all of a sudden, from having 2 funds globally, we ended up with something like 30 Africa-focused funds. And a significant amount of capital flowed into, a significant amount of portfolio flows flowed into Africa. And then from about 2010, that has sort of been dwindling, and by now it has come to a complete, almost practical dead stop. The challenge in that area has been that the story, I mean, you know, the expectations that a lot of people had in the, you know, from 2002 to 2010 did not materialize, because a lot of African governments, the trade surpluses that were generated from those higher commodity prices when China was booming did not actually go into infrastructure. A lot of it went into paying salaries and recurrent expenditure. So probably, you know, one of the first big things that I would say African governments and governments like Ghana need to do is, we need to develop a track record of delivering and execution, which means, you can't run an economy with inflation in double digit and then we talk about your currency risk. There is no way of mitigating that currency risk. Your currency is going to devalue. So it is necessary to start off at the macroeconomic level by governments understanding that running unsustainable deficits will have a cost somewhere. And one of that cost is the weakness of your currency. That's what comes from having high inflation. And then, but that's, that's a long-term political thing. Unless we all want to go into politics, we can't actually, our ability to move the levers there are limited. In terms of attracting capital today, I think if we were to, if you wanted to raise capital for Africa, and there's a lot of money around with the quantitative easing programs that central banks have been doing to, deal with the global financial crisis, deal with COVID. There's a huge amount of liquidity in the global financial system, but none of it is flowing into Africa. If you think about the amount of capital that has been created, and where a world where some 25% of global debt instruments have negative yield, and yet a Ghanaian company has to pay 20% return, they suggest that the risk premium is exceptionally high. And somehow we need to bring down that risk premium. Practical and immediate things that could be done is that we have to, if you're trying to get someone who has a range of investment options to look at Africa, there, the Africa risk premium is inevitably high, because they compare the infrastructure, they compare the news stories, and Africa always looks worse than other parts of the world. And I think, but there is a natural flow. There seems to me to be a natural pool of capital that's already comfortable with the Africa risk, and which we are all ignoring and not creating products to be able to service them. And that's the diaspora flow, that's diaspora remittances. Today we have something like $70 billion of diaspora remittances going into Africa. Most of this money goes into consumption. It's to pay Johnny's school fees, or to send money for medical bills, or to pay, but it's all going into consumption, and very little of it is going into investment. And the reason it's not going into investment is that there are no products that are addressing that. Those flows. Middle income Africans who live outside the continent can't actually invest in the continent easily. And I think it would be a big job to try to persuade European pension funds to go into Africa, but to persuade Africans who already know the continent to invest in Africa it's not that difficult, because they know the continent. So I think we probably need to create more products to try to convert the diaspora remittances from consumption into investment. So some things like, say, offshore local currency bonds would, but target it, or even you raise the money in dollars, you pay the interest in cedis. So somebody, you raise dollar funding and the interest payments are made in cedis. That immediately means that it's somebody who wants, and to whom CD has some utility, would be the investor who would buy that instrument. We could also, we could create local currency, probably GDLs or products, but which trade in the local currency, not in US dollars, because that FX risk is a big thing and it's a big cost for foreign for any hard currency investor, for the local company to generate sufficient returns to cover the current inflation differential between the local currency and the international inflation. It's a massive cost. And by the time they do that, there's very little returns left. So what we really want is people who are willing to hold the local currency. And that means, in my view, probably shifting our focus from trying to get pension funds and institutional investors to get diaspora remittances to somehow move from the consumption side of the equation onto the investment side.
Okay, Ayo, as usual, lots of things to unpack there. Starting with the track record, the longer term point about the track record, which does have the much needed impact on inflation and therefore a direct impact on the FX, the potential for the FX to continue devaluing at the rate that it has over the years. The idea of the diaspora bond is interesting. A number of us have considered it in very different lights. I think what would be very interesting for us to do as a collective is say something new and different about how we can get that done. I'm looking at Mikira and Ibiku. I'm going to come back to you. But the other important point that you talked about, which speaks about track record, delivering, execution, and focusing on infrastructure. Because if we look at the developing Ghana's development, there must be some products and solutions for infrastructure development. Banji, I'm going to come right to you, obviously. Understanding what AFC has done across Africa, and particularly in Ghana. And as I say, really let's share some real insights, real examples, and also from you, what are your thoughts on how to push the needle forward on new ideas, new instruments for investing in infrastructure in Ghana, or rather attracting the capital for infrastructure investment in Ghana?
Okay, thank you, Yvonne. And I also want to say thank you to Invest Africa and all the fellow panelists. I love speaking towards the end because everybody has said everything that I plan to say. So you've made my life extremely simple. So I'll just focus on what we are doing. Ghana is an important country for us at AFC. Ghana obviously was one of our earliest members, one of our earlier shareholders. And like Yvonne rightly said, we've made tons and tons of investments in Ghana as well. So, and capital market development is a major aspect of our mandates. You know, when people think about AFC, more often than not, people think about the bridges, people think about, you know, the power plants and all the hard infrastructure. But the reality is we also do place a lot of emphasis on capital market development. So when we look at Ghana, or not just Ghana, in fact, every other country in Africa, you know, we're always thinking about how do we improve the capital market, because clearly, you know, that intermediation role that the capital market plays is extremely important for us to sustain growth on the continent and to address a lot of the challenges that my fellow panelists have spoken to, particularly around FX and all that. So what have we done? A number of things. If I pick Ghana as an example, you know, clearly, you know, we have a very strong FI business whereby we collaborate with financial institutions across the continent, so including Ghanaian banks. One of the limitations you face in the banking sector, obviously, is the issue around hard currency, issue around tenor, issue around whenever there's a crisis, you know, everybody pulls out of the continent. And that's when we step up and provide that counter-cyclical support to the banking system to ensure that liquidity is flowing and the banks can continue to play a good role. We also do play a lot of role in terms of policy advisory and just talking to government and helping them to improve their operating environment. I hear comments around FX. How do you solve that kind of problem? Mikhail talked about providing some kind of insurance or something around that. Another thing we are doing quite well is to actually work with the central banks, and I think the role of central banks on the continent is extremely important, right? Because the central banks, probably out of all the players in the capital market in most of the African countries, probably the central bank is the strongest among all of them. And so central banks around the continent, we work with them to provide liquidity in terms of swaps, and they give local currency, and then we can invest the local currency in the capital market, develop the market. And at the back end, we have a hedge, because again, if you think about a swap, you have a spot transaction and a forward transaction. So there's a bit of a hedge at the end that guarantees availability of the dollars at the end, which is something that most international investors are worried about. The other thing I think I would like to talk about is the fact that I think it was Ayo talked about products, lack of products, particularly for the diaspora as well as international investors that could invest on the continent. So I think one area where AFC has done a lot of work is around product development. We talk about products all the time, but someone has to create those products. And, we spend a lot of time trying to create those products, try to innovate and ensure that those products are made available to the market. And once those products are made available to the market, we are able to deepen what is available in the market. And last but not the least, again, a bit of an interaction between our hard infrastructure and capital market is, if we think about the future of the capital market, I always say to people that any solution you cannot deliver onto people's mobile phones, in the world we're in, forget it, it's not going to last, because the world is becoming more digital. So we spend a lot of our time investing in broadband, providing internet access, which is the backbone for most of these capital market infrastructure going forward. So I think we've done that well with our Main One investment. We've done that well supporting telcos around the continent to expand their broadband capacity. So there's a bit of, an interface between what we're doing on the hard infrastructure side and the capital market side. So overall, I think all our work hopefully is helping capital markets develop. We also are a frequent issuer. We're looking at Ghana, we're looking at other markets to potentially even issue in local currency as well. So there's so many things that we're doing at AFC, which I'm happy to talk more about later.
Yeah, that's great, Banji, and I know that you haven't touched all the things that you are doing in Ghana, touched on all the things you are doing in Ghana. And I think just off the back of the fact that one of the initiatives that this particular government has done is to clean up the banking sector. So the cleanup of the banking sector, where they reduce the banks from 36 banks to 23, strengthening the capital requirement, and at a multi-billion-dollar cost to multi-billion CD cost to Ghana, are things that have improved Ghana's local commercial bank's ability to leverage on some of the products that you're talking about, and also play a bigger role in the economy. I mean, one of the things that I think we have talked about, Banji, is actually thinking about listing infrastructure bonds internationally. Again, that's another idea where organizations like yours, creating either Ghana-specific portfolios, or in your typical diversified approach, a diversified portfolio that also benefits Ghana. Again, because of the credibility of an organization like AFC, speaking about track record and delivering and getting things done. And then you couple that with an international listing. So AFC's contribution to screening the credible projects that you are ready to put your name beside, and also you have the confidence that they will actually be delivered, together with your ability to maneuver across the continent and solve problems which will come through in delivering infrastructure projects. And then we layer all that with the right governance and transparency that an international listing for an infrastructure bond would have. And I don't know what you think. I don't know if you want to talk a bit. I know that there's something that we've talked about, Banji, but I wanted you to just share your thoughts on that in terms of how useful, relevant that might be.
Certainly, Yvonne, I believe it's extremely relevant. It's something that we've been working on for some time. Maybe having an infrastructure bond. And even if I look at AFC as an entity, even AFC itself represents an investment opportunity for people who are looking for access to a diversified pool of African risk assets, essentially investing at the AFC level. We are obviously looking at debt products, and infrastructure bond is an example of something that we believe, because of our expertise, because of what Yvonne said regarding our ability to identify and package many of these investments, an infrastructure bond could be a way to get capital markets more active and for people to actually have another product through which they can invest. And believe it or not, from our experience, when we operated for the first 10 years of AFC, I think it was Ayo that talked about the risk premium. People outside of Africa, including the diaspora sometimes, again, this is the power of the media, sadly, believe that the risk premium should be here, when in reality, for almost 10 years, we were operating in Africa with a zero NPL, and up till now, our NPL ratio is really so tiny, 1% or something around that level. So again, that perception of risk versus the reality tends to be totally divergent. So I definitely think organizations like ours, if we put out an infrastructure bond, which obviously is something we've been thinking about, would be, that would be quite useful, be it in hard currency, be it in local currency. And I'm sure you're also aware that in recent time, between AFC, the Central Bank of Nigeria, and the NSIA, we all collaborated to set up InfraCorp in Nigeria. InfraCorp is about $2.4 billion fund, which is going to be investing in infrastructure. Ultimately, InfraCorp is going to be tapping capital markets. InfraCorp is going to be, providing all sorts of financial instruments which will deepen the market. We can replicate this in Ghana. We can replicate this across the continent. And I think Africa definitely needs all that investment in infrastructure. And our activity, leading this kind of discussion, providing the innovation and the product, will certainly go a long way, Yvonne.
Yeah, I absolutely agree. And thank you for raising the InfraCorp initiative, because that's definitely something that Ghana and other African countries could do very well to consider. Ibuku, you raised your hand first, so I'm going to ask you to please, I'm looking forward to your contribution on this point.
Yeah, I think it's an excellent suggestion from AFC and Banji and the rest of his colleagues around an infrastructure bond. And I'm not the moderator, so I shouldn't be posing the questions, but I think Banji would be—
Please be my guest.
It would be great to understand how AFC is interacting with, for example, the Ghana Infrastructure Investment Fund. That was set up, as you know, under the Infrastructure Investment Act a few years ago. The group, which is capitalized at about $250 million right now, has that mandate to seek and find and invest in these infrastructure projects. And I think rather than just having an infrastructure bond, I think we could do an equity piece on this as well. Actually have an infrastructure fund. So a pool of eligible assets that have been worked on by organizations like yourselves, perhaps some of the other major DFIs, under the banner of this Investment Act, sounds like a very, very solid way to move forward. And again, it's a new product, and part of the capital markets master plan, which was launched earlier this year in Ghana, it's about creating innovation in products, and getting the international investors who are fund mandated and have this sort of outlook by having a dual listing with these things, again, is one way to guarantee that you get some cornerstone capital into projects which are delivering very high and decent yields. And there may be some guarantee products around that, which can, again, create more of a risk mitigation environment. It seems simple, but the question is, why are we not doing it? And I think it needs as Yvonne said, a no-nonsense approach now. The element that was there before was that perhaps, we have to cherry pick our ideas. No, now it's a question of actually taking these ideas and actually executing on them in order to get the level of development that's needed in Africa in that infrastructure space. So I'll leave it there.
Yeah, no, a fantastic point, Ibuku. I think the one important point I wanted to pull out of all of this is over the last 10 years plus, what we've seen is an evolution of the types of participants who are ready to support projects in Africa. So plus 10 years ago, we didn't have AFC, we didn't have Frexim, AFDB, ready. The two latter organizations have been around for much longer, but as ready to come in and participate in earlier stages of the risk structure. AFC, for example, actually comes into the project development stage in some cases. And with that platform, bringing in other investors and having locals, or when I say locals, these organizations have their own international platforms as well, but they definitely have the much deeper local perspective to understand the risks. So that, and what's important about that, it means that when I think about these things from a deal structuring perspective, I used to get quite frustrated in the past because you would find investors worrying about the wrong kinds of risk and putting the emphasis too heavily on one risk versus another. When we have local players like AFC leading the charge on some of these projects and leading the financing, which they would do and bring others along, what we're seeing is that better understanding of risk means that it directly affects the execution capability of that project, it directly affects the cost of the project, and it directly affects the ability to attract other international investors into the project. So I think if you say, why hasn't it happened? I think because there's been a number of things that have had to nicely fall into place. I would also, and Ibuku, you know this, one important development that is very exciting is in a number of countries and in the international investor space, I have never seen as much interest in infrastructure investment in developing markets as we're currently seeing in these times. Maybe a function, as Ayo mentioned earlier, about the fact that there's too many assets sitting in negatively yielding assets, and it may be an increasing understanding of the real risks in these markets. But whatever the reason, there is a lot more focus on it now, and I think we should see some more developments going forward. Mikira, you wanted to say something as well?
Yeah, I mean, I think the other thing that we forget about is that many of these infrastructure projects are natural FX hedges anyway. So if you build an airport, landing fees are in dollars. If you build a port fees are in dollars. You build a refinery, the pricing of fuel is international. And many of the products you'd want to build locally and make locally have international prices. So you have natural hedges on the FX volatility for people investing and lending into these projects. And therefore, I think sometimes that the risk premium that Ayo mentioned earlier on is probably unjustified. Maybe there's a premium attached to risk around getting your money out, but as I've already mentioned, there's insurance protections for that as well. And I think Ghana in particular has been sort of looking very aggressively to build out its infrastructure investment over the last few years, and we have a situation where we have a decent oil price, strong gold price, a good cocoa price. So Ghana in itself is in a good position to lead on this charge, and I guess the openness of the economy helps as well. And a successful sort of, or a continued level of success within Ghana is a positive role model for other African countries to follow as well. So I think we have a great opportunity here to show how it can be done. Particularly if you have a fungible equity market and debt market between Ghana and international markets. I think we really do have a great opportunity. And before I finish, I just want to thank Invest Africa and all my fellow panelists. We've had a great discussion on this topic as well.
Thank you, Makira. Thank you. Ayo, I just wanted to come back to your point about diaspora remittances, $70 billion across Africa, and changing that mindset from maybe complementing, I should say, because the consumption piece will always still be there. But what are your thoughts on how we can get the diaspora community investing in the local markets, and more on the types of instruments? You did mention the offshore local currency bonds, raising in US dollars but interest payments in local currency. Just let's speak a bit more about what types of investors could be attracted to those sorts of instruments, and have you seen practices in other markets that we could share with the Ghanaians about how this gets done? Because I think, again, the diaspora financing, or rather the availability of diaspora capital, is something that we've all continued to scratch our heads on, and we all understand that we must begin to access that pool. We know countries like India, Israel, amongst others, have grown exponentially because they were intelligent about how they tapped into the financial markets. One of the big challenges we see, Ayo, is a lot of the providers of this diaspora capital are retail investors. And there's no international pooling of that money in the first instance to make it something that issuers could then access more readily. Do you have any thoughts on things that could be done, or ideas on how we might begin to tackle that big job of accessing diaspora capital?
Yes, I think, in that it has two components in my view. The first component is education. What you tend to find a lot of the time in the issue, which people have already commented on or raised, that the perception outside Africa of the risk premium in Africa is not consistent with the reality on the ground. I'm not trying to argue that Africa is not risky, but it's not risky enough to say, well, if an African company wants to borrow money, you lend it to them at 20%, whereas if a German company wants to borrow money, you lend it to them at -1%. The risk premium is not that, the risk premium is not that vast. But a lot of the time for a lot of African countries, their engagement with the international financial markets only tends to happen when they want to do a raising or when they need money. You don't have any program of ongoing education or ongoing interaction to make people aware of what opportunities there are. African governments don't consider these to be important, that type of soft power diplomacy. And that might be one way in which Ghana could, the Ghanaian government and its ministers should consider, a regular program of investor engagement, just to make people get more and more comfortable with the risks and with the current situation in the country. Policymakers being available. We try, if we have issues and we want to talk to ministers or to policymakers in Ghana, we have to call in favors. There's no, it's not an easy thing. Now, for me, that's my bread and butter. It's what I do on a daily basis. So finding somebody to help me get a call through to wherever I need to, that's what I do on a daily basis. Whereas if you work for a large international investor, at the first sign of the roadblock, you move your way and you go somewhere else. So some kind of integrated program of selling or marketing or of educating investors or people outside the continent, I think is critical and is necessary. In terms of specific products, you've certainly hit the point on the head. A lot of diaspora remittances are what you will class as retail investors. There are investors who are sending $100, $200, $500, and collecting, getting those guys to make investments is, it's a really laborious process. Some of the ideas that we have and which we hope we might be able to, we're working with others, is there are, maybe we can design these products or these investment opportunities and package them into investment trusts, some kind of an investment trust vehicle. It can be packaged, you can package anything into an investment. You can package infrastructure payments, you can package equity bonds, you can package debt instruments into an investment trust type vehicle. That vehicle then gets listed. From the moment that vehicle is listed, it is now accessible by a guy who just wants to put $100 into that product. Whereas, so long as the product remains in an unlisted fund vehicle, the only way someone can invest in it is to be an expert or professional investor. And at that point, the minimum investment level is much higher. You're talking about, you need a minimum investment of 100,000, sometimes 500,000 to be able to participate in that product. So what we need is probably to start looking at the products, and the opportunities that are coming, and considering the retail component, that we want to get some retail money into this opportunity as well. And from the word go, structure it so that the retail money has a way of entering. And given current investor protection laws in most parts of the world, I think it is easiest done when you have some kind of a listing wrapper put around that vehicle.
I think that's a brilliant point. Thinking about some sort of listing wrapper that where it's accumulating in the international market so that it's then easier to access. Definitely an important and actionable point. One other point that I have to re-echo, because it's so important for Ghana and other countries, access to information. Access to information. Please listen to Ayo. If you want people to become more comfortable, and I say this to people who get the memo, they truly do, but clearly there's more to be done so that people don't feel like they have to think through anything to access information on what Ghana is doing, because that definitely has a big impact on perception of risk. So Ayo, thank you very much for those points. Lots of things for a number of us to just go away and chew on. Banji, I want to come back to you and just, again, this diaspora flow, very important. What are your thoughts on how do we capture that? And also any other thoughts that you have as we round up?
Thank you, Ivona. And I think Ayo has done a great job talking about diaspora. So I'll just add a few more comments on what Ayo said. First, the power of the media is extremely important. I've traveled around the world, met people who still see Africa as one big country, right? And, that perception of risk, we really need to solve that. So we need to take control of the media. We need to do investor engagement. That will bring down that risk premium. I think we've talked about that. I'll talk more about diaspora and the capital coming in. I think the other angle that we should look at, and I think Ghana is a very good candidate for this as well, is the skills that we get from Africans in diaspora. So if you think about capital market and how we want to develop it, there's no need reinventing the wheel. Some of our African colleagues are in some of the best institutions around the world. They've gathered the knowledge. Let's find a way to bring them back home to come and help in developing the capital market with innovation and all that stuff. I think, so let's think about skills from diaspora as well. Thirdly, on diaspora, I was talking about listing and creating a trust. One of the things I've seen in recent time is lots of fintech involvement in flows, right? But most of the time, the fintech involvement is people giving access to Africans to invest in foreign markets, obviously because of FX risk and all that issue that we discussed today. But I've also seen a few people who are doing the reverse. We are trying to kind of democratize, investment access for that retail through fintech, such that people in the US or anywhere in the world can actually invest in African markets through their mobile phones or the internet or whatever it is. So I think all of us have a responsibility to encourage that. You know, if we encourage that, and then at the retail level, I think there will be a lot of flows. Just a quick comment on GIF. I know Ibukun talked about GIF and our relationship. Interestingly, GIF is a shareholder, or is an investor in AFC on behalf of the Ghanaian government. So we do have a strong relationship. The CEO of GIF used to work for AFC, and I'm sure you probably are aware that's it. So we have a strong relationship, and we support them, and they also support us. And last but not the least is the issue of guarantees. Again, I think this is Mikir's area particularly, but AFC has an A3 rating, one of the best ratings on the continent. How do we leverage that is to help, provide guarantees to de-risk investments on the continent. So to the extent the continent is looking at investments, we provide that wrapper. We are investors in InfraCredit. It's a local currency guarantor. I sit on the board of that company. Again, the whole intention is to improve capital markets by providing local currency guarantees to companies as well as projects. So I think there's so many things, and we definitely will be very happy to partner with the Ghanaians to implement many of these initiatives at AFC.
That's great. That's great. Thank you so much. Ibukun, I'm going to just go over to you. Again, just let's hear from you. Any other thoughts you have around partnerships between the international markets and the local Ghanaian market, and any other thoughts you have around this whole topic about diaspora, accessing the diaspora flows?
Yeah, absolutely. Let me talk about partnership, which is very important. I think we've all absolutely understood the point that international capital has to flow, but also international expertise needs to flow into the Ghanaian market as well. And we're very privileged to have signed a partnership agreement with the Ghana Stock Exchange that was actually witnessed by President Akufo-Addo at the London Stock Exchange during the Africa Investment Summit in January 2020. And that agreement, just at a high level, was really to look at how we can support cross-listings on our markets. We have a specific set of measures around post-trade to enable that to happen. The other issue in Ghana, which we're challenging, is the information dissemination process, which is far from ideal. And what do I mean by that? So Ghanaian corporates, when they're issuing their corporate news, their regulatory news, having that done in a centralized manner and done in a way that is scalable so that international investors also get access to information on those companies is vitally important. The third thing, and really looking at a charge from their West African brothers, is the demutualization of the Ghanaian Stock Exchange, removing I suppose, the vice-like grip of the broker community is very important for a modern, efficient stock exchange, and having a corporatized structure and having shareholders who can help to drive innovation as part of that structure is vitally important. And then the third thing, also final thing that our partnership agreement seeks to do is a very, very key and important piece, which is enabling, through these increasing passive investment flows, Ghana to take its place at the table. Today, Ghana is one of 11 African markets that are seen as being frontier markets. And in fact, for Ghana to move across market classifications from frontier to emerging markets, there's a very small amount of tweaking they need to do in terms of policy and regulation, development of things such as derivative markets. If Ghana hits that holy grail, then the amount of international capital that will flow through indices and through emerging market type indices, whether it be S&Ps or FTSE Russells or whoever's, will be immense and will be game changing. Today, there are only 2 African economies with that emerging market status. That's that's Egypt and South Africa. And look at the size of those markets in comparison to a market like Ghana, which at 61 billion cedis is less than $10 billion. It's not reflective of the potential of Ghana's economic prowess. So we're there to support that, and working very much in partnership with Echo and his colleagues, and as well with the SEC. And I'll take this opportunity to thank the government of Ghana for allowing us to have this very, very important relationship so we can help to drive and deliver deeper capital markets across Ghana.
Ibukun, thank you very much. I'm going to ask for wrap-up comments, starting with Makira. What are your last thoughts that we could share on this important topic?
Look, I think we need to continue to attract international investment into Ghana. We need to develop the local market to the extent it's possible and activate the local capital flows as much as possible from the local banks and the local communities. We saw a small bond in Kenya through the mobile networks. This needs to be tested out across the continent, and Ghana is a great example of somewhere where it could be possible to do that, as well as de-risking investment into Ghana, driving that infrastructure growth to I guess, build businesses that will reduce import requirements for things that can be built locally and made. And that will drive the balance of payments in the future and hopefully stabilize the FX rates as well, which makes it more investable.
Fantastic, thank you. Ayo, closing comments, please.
I mean, I guess, because of the my own practical experience of investing in these markets for quite a while, a lot of my frustration comes from our dealing with government officials and policymakers. Yes, ultimately our goal is we want to attract foreign capital into African countries. But if a foreigner is going to invest, you can be sure the first person they'll call is somebody local when they're doing their research. And if the local guy is telling them about all the problems that he has, that then makes you more reticent about going into that market. I think the African governments, and in particular the Ghanaian government, needs to engage in a serious way with its domestic private sector. It's a really core thing, or a really noticeable thing across a lot of African countries. Most governments don't consider it a critical thing to, if you look at ease of doing business reports, for instance, the bottom rank of all the bottom rankings are full of African countries, and the only person that can ease that, that can create the environment for for making business conditions better are governments. And these are they are simple things that the governments have to do, but a lot of African governments don't even think it's important. They don't see the connection between having making it easy for someone to set up a company or open a bank account, and they operate, the general operation of the broader operation of the economy, and reducing unemployment and creating economic growth. So I would probably say that African governments should spend, yes, the big goal is you want to come abroad and say, oh, we raised 10 billion, or we raised X for this project or Y for that project. But to do that, you need to create local operating conditions that make local businesses also flourish. Because when local businesses flourish, foreigners will want to come and join them and participate in whatever is going on in your domestic economy.
Yeah, thank you so much for that. I think there's quite a lot that Ghana government is doing on that front, but I think that's a topic for another day. Banji, let's move quickly to you for closing comments, and then Ibukun, last but not least. Thank you.
Okay, thank you, Yvonne. So for me, I think we've talked about lots of stuff: products, innovation, derivatives, diaspora flow, everything. This panel has talked extensively about so many of the issues and solutions. One area I think we haven't spoken a lot about is around the strength of regulation, right? Because if I cast my mind back to 2007, 2008 in Nigeria, when the stock market was booming, unfortunately, lots of people lost their share, right? And since then, the market has just not recovered. And that's simple stuff, issues around integrity of capital markets, market manipulation, those little basic things that make capital markets function well. So my parting shot or advice would be, we should not neglect this, because if we do, all the product innovation will just be a total waste of time. If people believe the markets are rigged, people will not come into those markets. So let's not lose sight of creating functional capital markets that operate with those high standards that make sure that investors are well protected. Thank you, Yvonne.
Thank you so much, Banji. Regulation, critical point. Ibukun, last but not least, quick wrap up from you.
Yeah, thanks, Yvonne. I think for me, the key point to leave with all the participants here is just around this certainty of dollar availability, but specifically for the capital markets. In Angola, there's a fantastic experiment going on right now in the oil and gas community, where there is a FX framework which connects multinationals, corporates, the central bank, and everyone, and provides a daily auction for dollars in that market so that dollars can be taken out of the market. If we have something similar like that for portfolio flows into the Ghana market, that would be a very interesting and exciting concept where you know that you have certainty in terms of how you can take your dollars out, what availability there is, and you can plan ahead. That's all that investors need. So you can mitigate risk, so you can invest.
Ibuku, Banji, Mekir, Ayo, thank you so much for your amazing contributions. I want to thank Invest Africa for the opportunity that we've had to really highlight some very, very important points that I do think will have a significant impact on Ghana's ability to fuel economic growth through their capital markets, and also lessons that, as Ghana has been doing and will continue to do, will innovate on things that other countries can copy from, learn from other countries, and continue to collaborate with others. Some of the most exciting things that I've heard of on this call that I do recommend we all look a lot more deeply into is the local currency bond issued by the government on a dual listing basis that would help the credit curve. The political risk and FX convertibility structures that Mikir's firm has, definitely worth exploring. On the topic of FX, the FX window model in Angola, still also very, very important. We also have the diaspora flows that we talked quite a lot about. And some a bit more of the innovation on there is around the, raising local currency bonds in dollars offshore and making some of the payments in local currency. Banji talks about derivatives, very, very important to help manage FX risk in particular. And so derivatives as simple derivatives at this point as a risk management tool, critical. Other very important and interesting points we talked about, infrastructure fund, looking at doing something on that listed internationally. Other important points we talked about, the investment in the backbone of the capital markets, whether it's technology, whether it's regulation, and whether it's the skills to back, to support the development of the market. And also the role that fintech can play, whether it's in simpler ways to access the retail investors, simpler ways to make products more accessible, more efficient. And then, of course, there is the demutualization of the Ghana Stock Exchange, which will help dramatically. And then access to information by the Ghanaian government is a critical and important part of their capital markets master plan. And then one thing that we encourage the Ghanaian government to continue doing, which they have been doing, is to continue to collaborate with international organizations, whether it's AFC, whether it's the London Stock Exchange, and many other institutions that will be very supportive in driving a lot of these solutions to help fuel increased capital flows into Ghana. So I want to thank you all for your incredible contributions. Again, I want to thank Invest Africa for giving us the platform to discuss these points. And I look forward to furthering the conversation on some of these topics with you offline. Thank you so much.
Thank you.
Thank you.
Thank you.